Now, depending on who you ask, there are differing school of thoughts on the state of the semiconductor industry today. Some fund managers will say that it's bearish, some say that it's still bullish. So, how do you actually assess which one is right? Now, in this video, I'm going to share with you what I believe is the current state of the semiconductor industry. I'll dive a little bit deeper about the cycles of the industry. I'll explain why there's still cycles. I'll also give you a breakdown on the capacity of what is the semiconductor industry going forward. And also, I will give you my thoughts on what are the constraints that the industry is facing today. Next, I'll also share about the emergence of leaders due to the capital investments. It's a very capital intensive business, the emergence of leaders. And last but not least, I'll share my thoughts on a recently published data set by The Edge on Malaysian companies, listed Malaysian companies within the semiconductor space. So stay till the end of the video to get those breakdowns. Finally, as a disclaimer, if you do need licensed professional advice, please do speak to a licensed fund manager, because I'm not a licensed fund manager. This video is purely sharing of my opinion for educational and learning purposes only. The semiconductor industry has seen its fair share of the bull and the bust, and this is quite clearly evident from the chart that you see right now in front of you. I think one of the worst years in recent times for them was 2019. They had a negative 7% decline. And if you stretch a little bit back in 2012, it had a negative 14% decline, which was quite bad for the industry. I mean, this is where industry players were actually afraid to actually grow their capacity. They didn't see that kind of sustained demand. But COVID really changed a lot of people's perception, and suddenly this industry got a lot of attention. I mean, with so many stay-at-home parents, workers, students that actually needed a lot of these electronic devices, a lot of industry insiders argued that the technology demand curve was just accelerated this past 2 to 3 years. And I wouldn't disagree with them. But then the bear group of people, the bearish group of people, they said that, okay, because the demand curve has actually been pulled forward, we're going to see a bear condition going forward because consumer demand has actually peaked. Those guys who bought the devices, they're not going to buy a new device for the next 2 to 3 years, and they're somewhat right. But if you dig a little bit deeper and understand the sub-niches within the industry, let's not forget that the electronification of our everyday lives has created an even bigger demand rather than just consumer electronics. You see cars and automotive players actually packing more and more electronics into the automotive industry. You look at kitchen appliances, you won't see a dumb kitchen appliance today, you know. I mean, even your rice cooker has quite a bit of electronics in there. And this is what is not apparent to most consumers. We take it for granted it's quite ubiquitous, and this is where the demand can still, from my point of view, can still sustain the industry. So I'll go a little bit deeper into the different niches, or what I call technology differentiators within the industry. And certain parts of the industry, especially in consumer electronics where chips are manufactured on the leading edge, are seeing capex being poured, capacity being built. But a lot of laggards within the industry, like the trailing and also the lagging edge guys who manufacture 200 millimeter wafers and below and smaller, and those guys that manufacture 14 nanometer and above, those guys who play at the micron level, the power electronic guys, they are not seeing a huge increase within the manufacturing capacity. And those are the places where you may be able to find opportunities. Now, a bit of the semiconductor value chain. There are numerous other YouTube videos that provide an excellent breakdown. I'm just going to go through a concise version here so that it just flows with the story and your understanding. So how the semiconductor industry is today, it's a global industry. There's no one player that's dominant within one country. And I would say forget vertical integration within one country. I know America just signed their CHIPS Act. They want to bring everything back in-house. I think for a small number of chips, yes, but for it to be fully sustainable, meaning You supply not just the military, consumer electronics, automotive, all within in-country. It's not going to be economically feasible. And that's the reason why a globalized supply chain has always been favored, because of cost, supply, just pure supply and demand economics, right? So what happens very briefly is that raw materials in the form of pure silicon ingots, they're going to be manufactured, and these ingots get sliced up into wafers, and these are actually sent to the wafer fabricators that actually print a design on the wafer, connect them, and then it's either they cut them up and send them to a packager like an OSAT, an outsourced semiconductor assembly and test manufacturer, where they get packaged into plastic capsules or even just bare dies, and they're actually connected with what we call connectors or leads, so that they can go on a printed circuit board, those green things that you see, and they end up being assembled somewhere in China, somewhere in Taiwan, into an end device like a phone, like a tablet, like a PC. And that's what we see as end consumers today. So obviously, if the semiconductor chip is given an opportunity to accumulate air miles, it definitely accumulated a lot of air miles. Can you imagine? It starts off in Japan, where the ingot is manufactured, and it goes to the west coast of. Sometimes it goes to Taiwan directly, and sometimes it goes to certain places within the US, anywhere that has a wafer fab manufacturing capacity. Then it goes to somewhere in Malaysia, where there's an OSAT player. And then it may end up in Johor, it may end up in Hong Kong, it may end up in Shenzhen, where it's assembled and then finally shipped out to the consumer. So very, very global. I wish I was the chip and accumulating air miles. No, I didn't say that. So where the problem really lies is the semiconductor niches and different value chains within the semiconductor niche, because we may see capacity being poured into the wafer, the leading edge, but what happens to the lagging edge or trailing edge? Now, even though you've seen headline news on huge fabricators like TSMC, Intel, and Samsung announcing huge capacity increases, then pouring billions into capex to grow their capacity, the struggle is there's still a lot of automotive, what we call sub-niches within the semiconductor industry, still suffering from shortages. And I'm going to spend a little bit more time explaining why these shortages will continue to exist. So we see a lot of investments in what we call the leading edge of semiconductor. But what I don't see, and what a lot of industry insiders don't see, is investments in what we call the trailing edge and the lagging edge. Now, let me just briefly explain these three terms. So leading edges fabricators are those guys that fabricate 14 nano and below. That means those guys that fabricate the 7 nanos, the 5 nanos, and perhaps in the future the 3 nanos. So there's only 3 players that really play in what we call the leading edge, and I'll show them briefly. And then there are guys who actually play at what we call the trailing and also the lagging edge. So the trailing and the lagging edge are semiconductor wafer manufacturers that manufacture anything above in the micron levels. Now, to be precise, there are different school of thoughts, but in general, anything in that is above 14 nano, above, that means in the micron level, those are guys are playing at the trailing and even lagging edge. Now, why is this related to what you see on the screen, which is the semiconductor shortages for the automotive industry? Most of the automotive chips are actually manufactured using what we call trailing or even lagging technology. What you see on the 7 nano and 5 nano are the chips that you use in consumer electronics, which command a very high price. So your M1 chips or M2 chips by Apple, your Ionos processors by Samsung, or your Kirin, the top-of-the-line Kirin processors by Huawei, you see. So these are guys that play at the leading edge, right? To understand a little bit more about the leading, trailing, and lagging edge, guys, I want to point your attention to this chart, which I think it's a very clear depiction of the evolution of the semiconductor industry. So in the past, when you see those guys at 130 nano, 90 nano, 65 nano, so as the technology matures, so the technology matures from the left to the right, okay? So in the early 2000s, 2002 to 2003, you had 26 players that were having the manufacturing capabilities of what at that point of time the leading edge. But as we go smaller and smaller from the 10 nano and above, you see there's only 3 players left at what we call the leading edge. Now, this is not to say that those guys that can only play at the trailing or lagging edge, they'll be obsolete. That's not entirely true. What we're saying is that there is more specialization in people who have the leading edge, trailing, and even lagging edge, and they all have a place to play in the market. So if you look at what China is trying to do, they were trying to prop up their own national champions to be playing at the leading edge. The struggle for them is, and my thought process is this: anytime you have centered government approach, which is not a capitalist, bottoms up, you are a company, you are a startup, you build domain knowledge from the bottom up, you are very driven by capitalism and try to make the best technology so that you can grow the company. But instead you have a top-down approach where government give you grants, subsidies. There's bound to be a lot of abuse. I mean, don't look too far. I mean, I'm a Malaysian. I feel sometimes embarrassed when government pours in lots of money to try to give Malaysian companies a chance to be at the leading edge. We often don't see success in it, and I think that is not just confined to Malaysia. It's around the globe. A lot of American companies, Taiwanese companies, what they do and why they succeed today is that the government give them certain grants, certain tax rebates, but they don't pour huge amounts of money directly from the central government and just fully finance the R&D. Because if you are given unlimited resources, you tend to be it's tend to be open to abuse, and it tends to not really achieve the objective that they want, because it's not driven from the entrepreneur's hardship of raising money, trying to make the technology the best possible way, and you know, we're seeing things like this happen in China already. I mean, it's quite common anywhere around the country, anywhere around the world that has a very top-down approach. So now I'm going to cover a little bit of history of and to help you understand leading, trailing, and lagging. So in the past, the wafers that I mentioned were manufactured in very small size. You have like 50 millimeter, and it progressed to slightly larger wafers, as you can see today through the years on the time chart on the top right. In the 1980s, the wafer size was 150 mm, and in the 1990s, all the way for 10 years until the year 2001, the predominant wafer size was 200 mm and what we call 8-inch wafers. 2001 and above, the industry transitioned into the size of a 300 mm wafer or 12-inch wafer, and we've not seen a transition to something bigger. I mean, you see 20XX, 450 millimeter, we've not seen scale production of it yet. They may have been testing phases in small quantities that may not have been reported in the main press, but at the moment, the industry standard is 300 mm wafers. Now, why is this important to understand the distinction for leading, trailing, and lagging? Is that most of the chips in the leading and some trailing are actually on the 300 mm wafers, whereas those lagging technologies are usually on the 200 mm wafers, which has been an industry standard for more than 20 years, right? And if you see the global leaders by capacity, you can see there's still quite a huge chunks of fabricators having the 200 mm and 150 mm wafer capacity. And these are mainly in the power electronics, the MEMS, sensors, optoelectronics space. So where are the uses of these power electronics MEMS? So MEMS are microelectronic mechanical sensors. So imagine if you need a gesture let's just say your fingerprint sensor, some cars like the BMW, you have motion gestures and all that. Those are what we consider MEMS in the industry. And those are what is being supplied by the 200 mm, 150 mm kind of wafer capacity. Power electronics, your power adapters, when you plug in your laptop and recharge, those power adapters actually require circuitry, and most of the supply actually come from this 200 mm wafer, because you don't need very high technology for it, very cutting edge technology, but you do need them to be reliable. But herein comes the problem as well. The semiconductor industry works in this method. So you have very high upfront costs to build the wafer capacity, manufacturing capacity. But what happens is it gets depreciated probably over 4 or 5 years. The technology becomes, I wouldn't say obsolete, but it will become old. And as a customer, you would want the prices of these wafers to come down as much as possible. But then the upfront cost is justifiable that the wafers are sold slightly cheaper. Not slightly, quite a little bit cheaper, because the capacity has been depreciated. Now, let me ask you what happened in 2020, 2021. For those of you who tried to buy a car, and if it was a modern car packed with a lot of electronics, you realize that there was a shortage of chips that couldn't be supplied to these cars. Now, why is that? It is because a lot of these chips come from the 200 mm wafer manufacturing capacities. And for guys like TSMC, Intel, or Samsung, why would you want to invest so much money to manufacture 200 mm wafers that are priced at probably cents, versus investing into a new plant that manufactures 300 mm wafer capacities at the leading edge, 7 nano and below, that can command probably 10 times the price of a 200 mm wafer? So you see, the supply-demand economics doesn't really work here. And therefore, while we may see a lot of capacity increase for 300 mm going forward, what we're not seeing is 200 mm wafer capacities not growing, because there's no economic incentive. Can you imagine spending, let's just say, even half of building a 300 mm to a 200 mm wafer capacity, but then you're only charging 1/10 the price? Does it really make sense? That's where the industry struggle really is today. And I think once you understand this and you relate it back to the cycle, a lot of fund managers, there are two different schools of thoughts. A lot of fund managers say that, hey, I think the semiconductor bull is coming to an end, and therefore we should pull our money out from that sector and then rotate it into another sector. I don't really agree with that statement. I believe that there's still pockets within the industry, if there's fantastic valuations for it, pockets within the industry that can capture this certain demand that is not being met by the supply chain. And as I explained to you, those 200 mm wafer guys are, kind of like kingmakers today, because they are the guys that may not be able to charge 10 times the price because it's not leading or even trailing edge. It may be even lagging. But the supply constraints of the manufacturing capacity actually enables them to say, hey, guys, we got to increase a little bit of our prices. We need to pay more workers or build capacity. But, if there's no economic incentive for us to do that, why should we do that? So finally, I will give my thoughts on the semiconductor companies that are listed in Malaysia. Now, there's only a few wafer fabricators. Actually, there's only one that's actually listed, which is Silterra in Malaysia, part of the DNEX group. Most of the guys that are listed in Malaysia, the space they play are not so much in the wafer manufacturing capabilities. They are in the OSAT space, the EMS, which is very low margin, high volume kind of game. The ATE guys, the automated test equipment manufacturers that manufacture machines to help players within the industry, precision cleaning, people like Frontcan, and high performance test sockets. So the market has taken quite a beating. And as investors, what we want to buy is not buy at a cheap price. You want to buy at a cheap valuation. So if we look at the valuations, a simple form of valuation would be an indicator like PE, right? There are pockets of people that or industry players that, you know, may warrant a little bit more of your attention today. Like I think MPI, you know, a current trailing PE of about 17 times. Yeah, it looks interesting. You know, again, this is not a buy or sell recommendation. What I'm saying is this is actually just a guide for you to start digging. And for me, understanding the semiconductor industry more and more, you know, I'm just scratching the surface here, more and more helps me clarify that I try to look for market leaders. Market leaders not from a Malaysian perspective, but more from a global value chain, because obsolescence is real in this industry. And what you want to do is you want to find guys that have like a 10-year advantage or even a 5-year advantage. And you bank on those guys because by the time the competitors or the laggards actually catch up, they're probably 5 or 10 years ahead. And this is where the likes of TSMC, these are the likes of where ASML are. And I think that's a struggle for a lot of Malaysian companies to emulate. I'm not saying that they are not investable at all. What I'm saying is that if their progress or their growth is actually tied to one of these leaders, that's where it can be a proxy. But if you are not very familiar with the space, don't know the sub-niches, I think it's better for you to actually just bank on the leaders because they have the capital intensity capacity to be able to progress, to grow much faster than the laggards. They have the strength of the balance sheet to be able to grow, to do R&D. And that's where it minimizes your mistake and increases your margin of safety. So those are my thoughts. It's not extensive, I know. I guess if I do it extensively, it would take 2 to 3 hours just to explain just the value chain alone. But my thoughts on the semiconductor industry, my thoughts on if you still do want to stay invested, you should actually be banking on the leaders. And if you do want to find, you know, certain arbitrage opportunities, I think look for companies within Malaysia that have low valuations that the moment there is still another upcycle, you're going to benefit from it. So if you think you've benefited from my content, I really appreciate a subscribe. I really appreciate a like and for you to share it with other people. I'm on a journey to elevate the knowledge of investors in Malaysia and beyond. I'm also on a journey to elevate myself by producing this kind of videos, doing this kind of research. I get sharper and sharper and give better insights in my future videos. So hope you have a great week ahead, and I'll see you in the next video.